Okay. Good morning and good evening, ladies and gentlemen. Thank you all for being with us. This is our fourth Fintech Friday session. My name is Karila Kilian, and I'm pleased to be moderating the event today. So Fintech Fridays are monthly thought leadership meetups between fintechs, financial service providers, big techs, unicorns, investors, all of them working together to drive the female economy and unlock its full potential. We have a very exciting program lined up for you today, and we hope you will find it the most valuable and will engage with our speakers. A few housekeeping rules before we start. Please keep your microphones on mute, and unless you have a speaking role, try to minimize your video output so that we try to keep the bandwidth low. Use the chat function to engage with the speakers, ask your questions to the panelists, and please make sure that you rename yourself so that we can identify you in case you ask questions instead of referring to you as Galaxy Note 567. With us today, I have a panel of experts from fintechs all around the world to discuss the importance of partnerships. So we have Danielle Gutierrez, Chief Data and Analytics Officer, BHD Leon, Nadia Benaissa, Marketing Director, BPC, Sairi Shahal, founder of Sheroes, and last but not least, Barbara Riesco, Product Owner at Uala. So Alliance Research in 2020, how fintechs can profit from the multi-trillion-dollar female economy, found that fintechs are well placed to tap into the women's market. They're largely overlooking it, unfortunately. So to tap into the women's market, we saw in 3 different sessions how that can be done in a meaningful way. Hi, Danielle. Thank you for being with us. But fintechs must move beyond the regular gender-neutral products that they tend to offer to move into a more gender-intelligent approach through each stage of their sales funnel. To reach and impact women, partnerships are also key. Partnerships with other financial service providers include, partnerships with banks, payments, insurance companies, organizations such as telcos, ISPs, e-commerce platforms, as well as key ecosystem players like government agencies and community development organizations and incubators. As per our research in 2020, 3/4 of the fintechs that we surveyed had already partnered with one or more financial service provider. The same proportion of Alliance members, all of them being financial service providers, reported having partnered with fintechs. However, only 8% are working with fintechs on solutions for the women's market. This speaks to the need for stronger communication between women's market teams and fintechs inside financial service providers, as well as including what is needed by women and for women's market in the conversations between financial service providers and fintechs. The objective of this session is to highlight the importance of these partnerships and what each party, being FSP or fintech, can bring to the table, and to showcase some of the most successful use cases as proof points. So first, quick round of introductions. I'm going to ask my speakers and panelists to actually present themselves and their companies in 1 minute, and then we kickstart the session. Danielle, we start with you. We go with the order of the pictures.
Hey, how are you? How are you doing? Sorry for the delay, but I had some technical
problems. No worries.
Okay.
All good now.
My name is Daniel Gutierrez. I live in the Dominican Republic and work with BHD Leon. I've been with the bank for 18 years and was responsible for leading the women market strategy and program within the bank. After that, I was leading digital transformation, and right now I'm the Chief Data Officer for the bank and for the financial group. So I'm very pleased to be here, and thank you for giving me the opportunity to share my experience.
Thank you. Nadia?
Yes, good afternoon or good morning, everyone. So Nadia Benaissa, so I'm the Marketing Director for Global Markets at BPC. I've been in the fintech industry for over 15 years, working for digital banks, tech providers, stock exchange around the world. Today, I lead some initiatives empowering women and collaborating with some central banks, national payment system, Ministry of Finance, banks, microfinance institutions to help include women into their strategic plan.
Spot on. Sairi?
Hello, everyone. Thank you for having me here. I'm Sairi Chahal. I'm the founder of Sheroes. We are a company committed to building women's internet. And I've just founded another company called Mahila Money, which is a neobank for women. And all the work we do focuses on 4 themes: safe, high trust experience of the internet, employment and opportunities, entrepreneurship and learning, and access to capital and financial products for women. We're a network of about 24 million women, and this conversation really appeals to me.
Perfect. And last but not least, please, Barbara.
Hi, hello everyone. My name is Barbara. I currently work as product owner for Wallabiz. This is the acquiring solution for Walla. Walla is a financial ecosystem, 100% digital. We have already more than 3.5 million issued cards in less than 4 years. So very excited to be here and share more about what Walla is and how we work.
Perfect. Thank you very much. Okay, so let's start this conversation. Maybe we start with you, Danielle, given that you have the most hats in the in the group today. So you launched the women's strategy at BHD Leon, and you also led the digital transformation of the bank. Having both hats, can you share what a fintech can bring to a women's market program at a bank, and also how a bank can support fintechs, especially to reach new segments like women?
There are 3 things, or at least 3 main things that fintechs can bring and have brought to our bank in terms of a women's market program. One is innovation. The second one is agility, or a new culture. And the third one is the opportunity to capture or develop new business models. Those are the kind of the 3 main things that I think that are key that we can receive from fintechs. In terms of innovation, we can talk about new technologies, but new technologies kind of focus on certain things. For example, credit scores. Credit score it's a great value that fintechs could bring a non-traditional perspective on how to give loans to women in terms of the data that we have. The second one has to do with data analytics in order to better understand the woman's needs. We had a research when we started the program that we found the specific needs for a woman that had to do with well-being, with time, with entrepreneurship, with family. Now trying to understand the customer life cycle of the woman according to their needs, that could be brought by data analytics. The other one is financial education, yes, in terms of how to manage their finance. Those are kind of the 3 things that I could think that we have thought about with fintechs. The second element in terms of an agility definitely has to be a new culture, a new way of doing things, much more faster, much more collaboration in the way we interact, and entrepreneurship. And the third one is new business models. Actually, we are creating a kind of a new business model and trying to create a fintech, payment fintechs for ourselves. And it's been a really good experience to interact the traditional culture and the traditional model with the new business model. So those would be the three elements that I think that fintechs could bring to the women's market program.
And if we flip the roles, what do you think a bank can bring to fintechs? How they can support fintechs?
My understanding is that the most important things banks have that fintechs don't are customers. In terms, at least small fintechs that are in the early stages. So the way the asset the bank would bring definitely is the customers. It's not the processes, it's not technology, it's the opportunity to better serve the customers. That's why, for me, personally, the perceptions of fintechs change from a competitor to a partner. And that's the way we're looking at this relationship with fintechs.
Beautiful. Thank you for that, Danielle. Nadia, I have a question for you. You have more than, as BPC, you have more than 350 customers spread across 95 plus countries. The essence of BPC is completely in B2B partnerships. Can you shed the light on what kind of partnerships you do have in place and how they help you meet your objectives of serving women's market?
Mm-hmm. So as I mentioned earlier, so we collaborate with different type of institutions. So they can be central banks, Ministry of Finance, microfinance institutions, banks, and so forth. And what is important to mention here, and I like to take our motto to explain the story a bit in more details, is bridging real life to digital. How can we make an impact in people's life using technology? And we know that we cannot do it on our own, so we need different kinds of partners. And what we have delivered, I would say earlier this year on this vision, is that we created a different concept around partnership. So we thought of, taking a problem, at core and trying to create some kinds of partnership around it. So we created an agri-marketplace in India, just to describe a bit, the kind of partnerships that we have. And we brought together banks, insurance companies, logistic partners, advisors, cooperatives, NGOs, so that together we could solve these problems differently using technology. But here the technology is a means to an end. And we created that so in a digital format. However, you have to enable, that transition between the real life to the digital world. So we know that a lot of people use mobile phones, but they probably do not have smartphones. So we created another network, which is more physical, around that concept, where we have, agents, we have the cooperatives acting and making the transition with the people who are not tech savvy and connected and bringing them to the platform. So really the objective there is enabling financial access, but also growing a business, how we can help them grow their business so that they become, segment that is of interest to banks. How can we help banks onboard, clients with less means using technology at cheaper cost, which makes, again, the business model really sustainable for them, and how we can do that together with partners, solving all of their problems in, onboarding those type of customers. So we took the agriculture, I would say, as one industry, and we replicated that in other industries as well. So just in a year, to give you an example, we onboarded about 380,000 farmers. Year 2, we expect to onboard 1 million and to transact for $150 million. The farmers are telling us that they are earning more because we remove the middleman. They are getting special products that now are designed by the bank, special cards, so that they can grow their business, buy products, get sufficient working capital. And our ultimate objective is to create what Danielle has mentioned, different alternative credit scoring, which are not from the bank side and what they have in their bank account, but how they transact and how they run their business and how their business is growing, or sometimes to lend to the buyers so that they can get, their purchase order made on the long term. And again, solve a problem about growing their business. So that's a different way, I would say, of thinking about partnership. And the industry was quite surprised that BPC would lead there. But it doesn't matter, I think, if the bank, the tech leads, as long as we are together and we deliver, on that promise and make an impact.
Wow, thank you. I think that shows the lengths that partnerships can go to, and how many different players should actually collaborate to make the ends meet. Thank you for that, Nadia. Sairi, Sheroes is a community-focused tech startup, and as you mentioned, you have 20 million plus registered women users. Looking at your sales funnel, what do you think are the main adaptations you had to make to be successful with women? You're on mute.
Yeah, so I think working with women has some interesting factors that play a big role. For example, one of the earliest investments we made is actually building Sheroes into a women-only space. And a lot of women who are now our users, are first-time internet users, and safety continues to be a challenge, and safety continues to be a big barrier, both in the offline world and in the online world. And second was, I think one insight that's central to our business is that when you work with a large number of women, you have to make space for rest of their lives. When a woman walks into that room or when she logs in, she's pretty much bringing all of herself, and making sure that she's able to find work, play, and support here is kind of very central to building the platform. Third is, I think this playbook has worked beautifully in different parts of the world as self-help groups, as microfinance groups. So this cohortization of safe space has happened before. We're just taking that insight online. And of course, fourth is this person wants very simple transactions. She doesn't, she wants the entire flow to be highly simple. And I think WhatsApp is the benchmark there of how simple a product needs to be, the most widely adapted product that we have. And I think it's a thin data, for the user in terms of, giving her access to credit. Most of the business is highly fragmented. They're very, very small businesses. So they don't even qualify against any sort of segmentation that most fintechs or banks offer. So really sort of creating sort of a mass customization at a user level are, I think, some of the challenges that come to us when we look at creating this funnel. But all of them sort of fall under the same bracket that, hey, let's create a safe space for this person to have a really transparent, honest experience. So experience counts a lot. Experience and engagement are two major factors in terms of working with this customer set.
Thank you, Sairi. Barbara, so 65% of your users had no credit history prior to downloading your app. I mean, this is what I found on the online about Uwala. How have you solved for this to allow access to loans? I mean, who do you partner with to access alternative data, or do you use actually alternative data?
Yes, you're right. 65%. Don't be surprised. It's pretty high, but yes. As Daniel was saying, and I think that's part of an important role that Uwala takes here as a fintech, is we build a credit history for these users that have never had access to credit in the financial system. So we have a role of informing the central bank here in Argentina of their behavior and starting to include them in this formal system for them to be able to get these credit products. In the Uwala ecosystem, we have a two-step strategy in order to give them these credit products. We start with a product that we call the installments product. Uwala is a prepaid card, so you can't pay in installments, but this product allows you to be given back the amount of money that you've spent in your expense and pay it back in 1, 3, or 5 installments. So this product, it manages smaller amounts per transaction. We already have 4 transactions per minute of this product and more than 500,000 users that have used it. And this first credit product allows us to build this credit history for the user and go on to the next step of the strategy, that is a bigger amount product, that is loans. The loans that these users can get, they get them through the app. We have a 100% digital onboarding process in order to get the information from the user. The user can choose at what date in the month, at what moment in the month he wants to pay back for this loan. And all the installments in which he has to pay back the loan are fixed. So in this way, we can get from the installment users that have already shown a positive behavior, migrate them to this more complex product that is the loans product. And we have already granted more than 230,000 credits this way for users.
Wow. And so since it's a prepaid card, you didn't really need the credit history and you didn't even need alternative credit scoring. You actually built the credit history by giving that. Okay.
Exactly.
Nice way of countering that challenge. Danielle, I want to come back to you, and I want to talk step-by-step process or logistical, steps. How do you build a partnership? What's the process for a bank to build a partnership with a fintech? I mean, what's the first step you need to take? Are there any specific requirements that you need from fintechs?
The first thing I believe that we as banks, and in our experience, we are not that yet need to do is to understand that it's a completely different type of relationship in terms of either a provider or a partner. Yes, I have an experience that it was kind of funny to me. I was trying to set up at least an NDA with a fintech, and after that we started looking at the numbers, and suddenly, okay, let's look at an example of the product that you have, and we have to give some money, and suddenly, okay, I have to send the information to our contract department, and they evaluated the fintech as it was Microsoft as a provider, the same way. So they were looking at the numbers are not positive, you're gonna risk everything. So the first thing is internally, we need to change our setup. Yes, and it's not easy. It's not easy because we're really kind of, at least in our bank, we are really managed by all the policies and the standards and how we need to do it. So for me, it was a challenge. Now, if we look at the processes specifically after moving after this situation, we need to be really clear to have clarity about the purpose of what we're trying to gain or to partner with the fintech. The objectives have to be really, really clear. Yes. The second thing is that we have to have a win-win mentality. This is not about the bank trying to win or the fintech trying to win. We need to have a partnership that you have a win-win mentality. In order for this to work, the business unit has to lead the project, the initiative, or the business model. Why? Because the business unit, the fintech, is going to bring value to the business unit. It could cannibalize some of the business that the business unit has, and the business unit had to understand the value and how can they grow with the fintech. And definitely we need to work at a different speed. Look, I have situations in which NDAs took 3 weeks to be signed. 3 weeks for the bank, 3 weeks, because the NDA, it was seen as if we're going to do a merger or something like that. No, it's an NDA. It's so simple. Let's do it faster. So I had to go talk to the legal department, to the CEO, to everyone. We need to change speed. And in fintechs, there is a different perspective. It's volume, it's not profit. At least in the initial stages, it's not profit. It's not about profit. It's gaining volume in order to get and get value. So that would be kind of my analysis of what we have lived in our partnerships or relationship with fintechs.
Thank you. I think that's great. Nadia, coming to you. So given your extensive experience with working with banks, have you seen any key differences? And what do you think are key to successful partnerships from your side and the bank side?
Absolutely, and I will talk about my entire experience, within the fintech and on the bank side as well, on how it was successful and why it was successful. But it's definitely, I follow you, Danielle, on that. It's a shift in mindset. So I think you should not expect from a fintech to have done similar projects that you want to deliver. If you really want to innovate, you are going to create something new. So you should not look for bigger references of, your bank size and so forth. I think it's also a shift in mindset in how do you collaborate and co-create with them, and how I keep coming to this point, but how do you solve critical business problems, whether they are consumer problems or SME problems? And I'll give you an example of a recent digital bank that has launched Tonic. We are very much aware of, a personal account or, a couple's account or a child account. But they created a kind of, collective account where everybody, members of the family or friends, can collectively save, earn on top, taking inspiration from what's happening culturally in the Philippines. And this is a tradition. It's called the paluwagan. This is what people do. How do you make that possible through a bank tech collaboration and deliver on that vision? So I think you should think differently, have a different mindset, be ready to co-create and create something new and test, but pivotate early enough so that you don't have risk to really lose a big investment. And about creating true value. Some of the partnerships, get announced for hype. It's not about, you looking good by partnering with X bank or X fintech. It's about really, delivering something that makes a difference, that works, that might work. Sometimes it's a question of time. Sometimes you are too early in the market. Sometimes you are too late. So I think you have to balance those three components. So shift in mindset, shared vision, co-creation, and true value.
Thank you. And I think that's great. And it's amazing to see that the creative ways that such collaborations and partnerships can actually create solutions that we thought are beyond what conventional banking has taught us to think, in specific silos. Sairi, as Shiros, who do you partner with now and why? And who are you looking to partner with and why?
Yeah, so we have two kinds of partnerships. We have partnerships on the women's side, which is where a lot of our partners are women groups who have existed offline, and in some ways they are coming online using the platform. The other partners for us are banks, for sure, NBFCs, mutual funds, insurance companies. So in some ways, what we end up doing is we're not a regulated business, we're a fintech, but essentially what we end up doing is we end up creating the engagement and the experience layer for the user. We also do the underwriting and collections. So the user doesn't end up interacting with anybody in the backend. They don't go to the bank or the NBFC. All we're doing is creating integrations where every possible product that the user would like to use. Most of these are small business loans with no collaterals, and most of the users are not they don't have a credit history that's available publicly. Most of them barely transact via the bank accounts. A lot of them now use wallets and the UPI ecosystem, but still underbanked, and most of them have never taken a loan, so there isn't a lot to really credit score them on. So we work with all financial services partners and become the layer of experience for the user in between.
Okay, thank you for that. Barbara, so Wala has a partnership with MasterCard and also recently launched the Wala BIS, where you work the most, a merchant acquiring solution. So can you share the benefits of this partnership to both parties?
Yes, of course. So as you said, we have a partnership with MasterCard, and with this Wala BIS solution, we have in some way closed this circle of building a financial business with MasterCard, not only from the issuing side, but also from the acquiring side. On the issuing side, we offer prepaid card to people that have not had access to any formal financial system before. So we're giving cards to people who never had a card before. So in that way, we're including a lot of people into the system. As you have said before, this is a prepaid card, so our requirements are pretty low to be able to enter the system with our prepaid card. You just have to be above 13 years old, even lower age people can get the product, and it has no cost either from renovation, issuing, or maintenance for the account. So it's really an easy to access product. That is more from the issuing side. More inside, we are not only getting cards to people who have never had a card, but we are also getting businesses that have never accepted payments with cards to accept payments with cards. So giving them a lower fee than that of the average market, giving them instant disbursement of the payments that they get from credit cards. We are approaching the cash payment market, and we are allowing businesses that before had not considered the option of getting payments from credit, debit, or prepaid cards to get them. And in that way, we build a stronger ecosystem, not only for our users, but also in our partnership with MasterCard.
Nice, nice. That's good financial inclusion. Barbara, I wanna stay with you, and I wanna ask you another question. I read online that 22% of the Gen Z, so the 18 to 25 actually gap of the Gen Z, Argentinians have an Ualá card. What do you think are the key success factors that you have with the Gen Z?
Yes. For us, we believe that Ualá was always a product that clicked with this mentality, with the mentality of this segment. We built a product that, as I said before, if you have already 13 years old, you can access it, and you don't get a card that is an extension of your parents' card. You get your own card. So you get this sense of autonomy that you have a product that is yours, and your parents also get the security, the sense of security that they can control what you're doing, because since it is a prepaid card, you can't use it unless you have charged it with money. So if they don't give you the money in order to use it, you can do it. So in that way, we built this combination of a safe but also autonomous product for this generation. And on the other side, also the fact that we are 100% digital business, and we get to do our customer attention through email and from our in-app chat. They don't have to go to the bank, do any signing of any documents. There's no bureaucracy in your process of getting the product. So that also clicks a lot with this segment, we believe.
Was it a purposeful thing, or it just so happened that the model that you had put together was interesting or attractive to this younger generation? Or did you make a conscious effort?
No, the product is always thought for a broader audience. We're not going to the niche there, but it was more of our early adopter space that were more willing to get this product and try something new that was very unusual for the Argentinian market.
Thank you. Thank you for that. Daniel, I want to ask you another question about challenger banks. So we know that challenger banks, neobanks, however you want to call them, they're blossoming more and more. And what we're also seeing as a trend is that financial service providers and banks are actually launching their own fintechs, known as speedboats. Can you share your experience at BHD in this, and where you see this going? And what kind of services are these speedboats actually providing? And what's the advantage of offering it through them versus the bank itself?
In our case, Dominican Republic is a small market. It's 10 million people, correct? So definitely the market size opportunity for a neobank is kind of limited if you think about the other markets within the region, correct? So we are looking at neobanks that started in Brazil and they're moving to other countries, or started in Mexico and the same way. But we're not looking at specific neobank for our country yet. I believe that's gonna change within time, but that's what we're looking right now. What we decided to do, as I was mentioning, in our first question is it's evaluating new business models. And we decided to serve another segment, unbanked or underbanked segments through a different, not necessarily a different bank, because we're not creating a digital bank. We're started with payments, and this is in construction right now, and we're launching sometime in the next months. We're launching our kind of fintech. It's a different entity from the bank. We created a different team with different technology, but still we have some of the legacy of our culture there on top of it. So that's what we're doing.
And why do you think that, let's say, serving this segment should be done through this fintech rather than the bank?
I believe there are different elements. The first thing that we need to think is we need to serve segments or that are changing the way they interact with banks, with traditional banks. So customers are changing the way they behave, and banks they are not necessarily very attractive for new generations, correct? So that's one thing that we need to take into account. The second thing that we need to take into account is efficiency in terms of how to serve those customers. Most of the banks, when we think about the cost to operate through branches, traditional branches, and trying to get to those unbanked or underbanked that normally have small amounts of money, is not necessarily a profit to serve them through the traditional bank. So digital or digitalization or doing everything not necessarily in presence, it's much more efficient to serve those customers this way. And the third thing is that moving a traditional bank completely from one customer experience to another, to one positioning to another, it's not that easy. So we decided we decided to not use our brand specifically to these new payment platforms initially, because we're trying to give another perspective for those customers to be served. Those are the three main elements.
Okay, thank you. I have a question to all of you, and then I'm going to open the Q&A. So anybody who has questions, please feel free to add them in the chat. I have a question about regulations. Obviously, banks are highly regulated, and fintechs are highly not. And how do you overcome these challenges of creating partnerships with I mean, I did hear Danielle talk about that NDA and fintechs being so fast and banks taking forever to just simply look at an NDA. But I mean, we're talking even maybe the creative ideas that fintechs can bring to the table that might not be very well looked at by central banks in terms of, I don't know how, for example, Tonic is doing that group lending, but if I try to look at it from a central bank's perspective, it's probably a lot to chew. So how do you think this relationship was actually going to play out? How do you really overcome those regulatory challenges between two very different entities and players? Sairi, maybe I start with you. You've been nodding quite a lot.
Yeah, I think classic challenge, right? I think innovators' dilemma, banks which are big and are have massive market share, do want to innovate, but they're just not built to innovate as fast. And of course, I think fintechs do want to go deeper with what they can do. And we see it on a daily basis. But I think there are banks and there are banks, but within the cohorts and universe of bank, there are outliers and there are smaller banks who are equally hungry. And of course, because they're regulated, they are the their platforms do not allow them to do a lot of customer facing innovation, especially with products, with experiences. And I think between compliance, reporting, and governance, everything does slow down. And I think that's where the sweet spot between fintechs and banks is that, hey, let's find what is it that that is good for you, is good for the customer, and is good for us. And I think that uh, and if you look all across, neobanks in the world, that's where it's working, where everybody is winning. So I think the fundamental formula is that everybody has to win. I think the customer has to win the most, and if the customer is winning, then there is a chance that the bank is winning and the fintech's winning. And we are seeing that play out. Like at least in the women's space where we work, we know that women are priority sector. They are priority sector from the regulators perspective, and it's a bank's mandate to work with more women. But banks are not designed to work with more women. Either they don't have the products or they don't have the consumer facing bandwidth to serve this customer. And I think that's where young fintechs come in, because we can do a lot of consumer facing stuff, and even hacky coding stuff, which can be quickly released and quickly killed if it doesn't work. But for a bank to do this is very, very hard, because it already means being answerable to the regulator for experiments that one is running. And we're seeing that play out, that, hey, let's identify areas. So for example, we in the mass amount of loans that we give are under $600 loans. Now just imagine how much work it is for a bank to lend $600 to somebody. The cost of dispersing that loan is probably maybe $200, so it just doesn't work out. But we're able to do this because we're consumer first. We're looking at consumer data. We are doing alternate underwriting, which is hard for a bank, but we do need the capital that needs to be dispersed. And I think that's where the sweet spot is. But broadly, banks are big. They're big machines. They're hard to move. They can't turn around very quickly. Whereas we're like little squirrels. We can run and hide a little bit.
Sorry, I want to stay with you. I have a question from Rati Manikant. I hope I said your name right. So he or she, I don't know, agrees that fintech's value can be on testing and building a smoother user experience in terms of balancing the consumer goals with the bank's business goals. But it's also more costly to work with these segments, and they have a lower margin. So are your banking partners seeing the long game?
Absolutely. I think, look, in India, we're a very strange country, because we have the most advanced digital payment stack. We have the largest number of internet users. We are the maximum users of data in the world. But we are also the country where women's participation in workforce is in single digit. Women's access to credit and banking is still very, very dismal. So it's very, very stark. And it is part of national policy to do this. I mean, every bank's mandate says that, hey, you have a banking license, you better put 30% of your funds in women, but that's never happened historically. So for a bank to look good, even to the regulator, not just the market, they have to do this. And they possibly can't do this on their own, because the gap between the customer and the bank is massive. So that's where we come in. We're literally the bridge, and everything else that we have done for women plays a role here, because there is a reason why putting the consumer first, is easier said than done. But it's much harder for a bank, because the truth is the bank's main customer is actually the regulator. You can't ignore the regulator when you are a bank.
Yes, thank you. So Barbara Magnoni has made a comment, and I want to turn that into a question eventually. So she says, banks, beyond just customers, banks also bring risk management expertise, analysis of business based on cash flows, and fintechs rely excessively on alternative scores. But in the women's market, especially at the bottom of pyramid, women's data is thin. And then Rati also adds that they also bring in the right types of regulatory licenses to fintechs, the banks. But what I wanted to ask, and Nadia, I want to point this to you, is do you think that banks also in these partnerships bring trust? Because we know that fintechs always have that question mark, and especially when we're talking about women's market. There is that small hesitation to completely jump into that full technological world. And do you think these partnerships are also critical for fintechs because banks bring trust?
Exactly. You point the exact term that is very important in this relationship as well. So the trust is essential in any financial relationship. So fintech and banks, they desperately need each other. And definitely when you get a bank partnering, with a fintech on the back end, can be, bank as a service, just delivering the account, and the risk services on the background is essential and brings trust to the client. Another example is, with the marketplace that we run, where we focus on women as well, the trust factor was important. So we had to partner with the institutions that they trusted the most. Otherwise, they would not onboard onto the platform because they didn't know anything about us. So we needed the trust factor to be there, and it's essential. And fintech and banks desperately need each other. I think that that is a key, to build those relationships and to make sure that it's successful and that the customers will onboard, easily and safely. And it's about their money, so they want their money to be safe, secure, and to grow.
Yeah, thank you. And then building on that trust, maybe I want to point this to you, Barbara. Ivania is adding, what about that consumer confidential information and data security and the risk of identity theft? So it's like a very specific level of trust. So how are fintechs prepared to build trust from that angle?
Yes, just as we were saying, sorry to repeat, but fintechs really do build trust through their partnerships, as we were mentioning before, just the banks that it may be behind it, the relationship with the regulator. For example, Wala, we are a regulated company. We're a payment service provider for our central bank. So we do have all that trust built through our partnerships. And also in terms of information, particularly in this question, we do have a lot of technical partners, a lot of security, data security partners that also back us up in order to protect the information of our users. As Nadia was saying, money is really a very critical thing to be handling for people and for our customers. So we have to be very, very careful of how we handle this information.
Yes. Okay. Thank you for that. Sairi, I have a question for you from Inez. On the consumer-facing side, you mentioned some attributes that women want, like a safe space. So what do you actually mean by that, and how do you create it?
Absolutely. So I think a lot of what we're doing is taking, again, from the success of microfinance and the self-help group playbook that's particularly worked well in India, South Asia, Bangladesh. So first of all, it's a women-only space. I think the fact that we kind of qualify everybody entering the space, and when I space, it's a platform, it's an app, and it's a website. Secondly, I think just how you engage with the users. So I think the modern day neobank motto is to not have human beings at the end of the line. I think we're going the other way. We're converting our support into video support. So for us, trust is very important. And a lot of our users are first-time online users, first-time neobank users, first-time users of payment stacks. So we have to take fear out of the picture, and we have to also be a buddy. So I'll give you a small example of a process. Like when we invite a loan application, the application's filled on the phone. It takes 5 minutes to fill an application. But after the application's filled, a call is generated between the user, a counselor who's actually like a qualified counselor and whose job is to hold empathy in that space, and a bank person, and I mean our fintech person. And this is a conversation that we strive to build a relationship with the user so that we understand who she is and what is the real help she needs. Is she sort of committing a grave mistake by taking a loan that would be very hard to repay, or does she need some other business advice or some help? And a normal bank would never do this, but we as a consumer platform will line up that help either via a partner or through one of the initiatives that we run. So going the extra mile is part of the safe space experience, you know. So so yeah, so women only. And then I think there's small hacks. For example, in India, a lot of paperwork says bring your husband. A lot of banks, traditional banks, will say bring your husband or bring your son or whoever is the male member of the family. Like, one of the promises we make to the consumer is to say there is no way, there's no need to bring anybody. It's just you. It's all about you. And I think that's the kind of psychological safety. It's not just physical safety; it's the safety of being sure of this experience.
Thank you, Sari. I have a question to all of you. So Dina says women can be hesitant to engage in activities that appear overly technical. So she's keen to hear the panelists, so your perspective on demystifying the tech and capacity building for women. Maybe Danielle, we start with you, because you work with women as well, as much as you worked in the tech environment. How do you think that can be done? You're on mute. Okay.
Can you repeat, please, the question?
Yes. So women can be hesitant to engage in activities that appear overly technical. So what can be done to demystify the tech and capacity building for women?
Okay, thank you. Actually, I was writing on the chat regarding that question. In our case, we have used like 3 different initiatives to work with that. The first one is video tutorials in which you can go step by step on the how to use it, correct? The second one is through leveraging our branch personnel to go through the process with each one of our customers, correct? And the third one is the use of influencers to show them how easy it is to move through our digital channels. But above of this, we have to really have a really good experience, simple process in which you need to do things. You need to really think about the experience and improve continuously how you're doing things, listen to your customer, and evolve what you have done initially. Those are the 3 things that we do.
Thank you, Danielle. Maybe Nadia, would you like to add something? I mean, definitely, I agree that the UX UI in itself is a first key to make sure that it is simple. Yes, go ahead.
I think in some of the cases you have to enable that transition, you know, to digital. So you need a physical answer to it. So adults education, for example, we run some Zoom calls. We have ambassadors helping us to bring them together, to share knowledge, to support, so that they are fully onboarded and then independent. So you need to create that autonomy through learning. I'd like to share another example, which is quite interesting. I'm not sure if anyone is here from Time Bank, but the way they do it on their side is that they have female ambassadors next to the kiosk where you onboard and you print the card, and you are within a supermarket where they can top up the cards or get cash out. So the education is done this way, and this way they onboarded over 50% women. So I think you need that education, that communication in person to enable that digital transition.
Thank you. Thank you for that. Before going to Rati's question, I want to move to Barbara's question. So one thing she's curious about is that whether any of the business models that's been designed for women can be actually profitable without loans. And the concern is that the consumer protection issues, you know, with business needing a certain percentage of loan to take up. So would you be profitable if you remove loans from the equation?
If I may,
yes.
I think actually loans is not the most profitable product, it's insurance. And again, I think at least in countries like India, women's coverage for insurance is again in single-digit percentages in a large population. And to be honest, that's where the opportunity is. But here's how we read the market. We know that loans is the connector product. Loans is the product that builds a relationship with the user, and that's what the user needs today. But what is the product which will drive a lot of traction and a lot of adoption? Not everyone's going to take a loan, but everyone's going to need some insurance, and your average premium per insurance is going to be way more than what you make on average, let's say $600 loan or $1,000 loan, or even a $50,000 loan. But so loans are a bridge product in a nascent market like ours, we see, but insurance and later, I think even other forms of investments like equity and stocks, but those are much later. Insurance is the coverage product for everyone.
Interesting. Good to know. I hope that answers your concern, Barbara. And I think it was very interesting and insightful for us as well to learn, because I think by default, people have the tendency of always thinking loan is where the institutions make the most money. And it's interesting to know that even fintechs are saying that's not the case. Rati has a question addressed to you, Daniel. So as the bank is on the edge of creating a speedboat, what are your biggest concerns? It seems like the beauty of the fintech-backed relationship is how they think versus scale and profit versus profit, and how they operate, being quick and agile, as you said. And that tension is positive with the bank's mindset. How can you ensure some of this good tension can happen if you yourself are building the fintech?
Actually, that's a concern. We created a completely different team, not from the bank. But if we look at the board of directors, we are the same. So we need to bring new perspectives, new ways of thinking. It's been a process for the board of directors to understand how we have to put a lot of money and not get any results for the next 5 years, at least. But my biggest concern is to really change our mindset within our small fintechs that we're creating. That's the concern, because I believe that the CEO was part of a bank. The CEO was the leading business payment person, and sometimes when I listen him at the board, I listen him like thinking as a banker, not as a completely different player in the market. So that's our main challenge.
Okay, and just maybe a quick yes/no answer to that. Did you bring in, or do you intend to bring in more women to help drive inclusive design in this fintech to make sure that your design includes serving the women's market?
Actually, the percentage of the product and sales, it's a woman, and part of what we're creating on that fintech as well is to try to serve a women's market in that specifically underbanked or unbanked. So we're creating a value proposition as well for women. We're starting in a general perspective, what we're moving forward.
Perfect. And last but not least, just again, simple yes, no to the three panelists other than Sairi. Do you all agree that insurance is more profitable than loans? Maybe just yes, no's.
We have a partnership in insurance with Mafre here in our country. And definitely insurance is really profitable, but not only profitable, but when we did the research, the market research, one of the main things that women need is their well-being and their family's well-being. And so it's a really, really important service or product for them. I believe that much more important than loans. We see that in our country that women prefer to save And when you save, you spend money, not necessarily take a lot of loans in comparison with men.
Good. Nadia?
On my side, yeah, it's not a yes, not a no, because it's not only. So I think there's a lot of, trends towards embedded finance, where financial services products will be provided by non-financial institutions. And I think that's the biggest chunk, is how do we hyper-personalize, deliver what you need exactly at the point of, time and where you need it. And I think this is where banks will probably generate most revenue in the future.
And Barbara?
Yes, just agreeing with what Nadia said, I believe that also talking about partnerships and ecosystems, the fact that you have a more extensive financial system really will bring people who use in the end that insurance, because having only a profitable product that in the end nobody wants will not be enough. So building the whole ecosystem is also a key part in that.
Perfect. And that is the end of our panel discussion. Thank you to my amazing panelists for this very insightful conversation. Thank you for sharing the answers to all these really nitty-gritty questions. And thank you to my crowd for asking these questions. I think it led the conversation beautifully. Thank you for being with us. I just want to invite all of you to register to our summit. Just check our website, financialallianceforwomen.org, and simply register to our summit. It's taking place October 5, 6, 7. You'll hear a lot more of conversations like this happening there over the course of 3 days. Our next FinTech Friday will be after the summit, so towards the end of October, and I will be sending you the details in due time. Keep checking your emails. Have an amazing day, a great weekend. Thank you, everyone. Bye-bye.
Thank you. Bye.
Thanks. Bye for now.
Thank you.